All right.
Good morning, Mr. David Cumming from Aviva Investors from Edinburgh, we say in French. Thank you for joining our Conscious Strategists Group. Thank you so much.
Pleasure.
Thank you for joining us to discuss about your professional path. Right now, you are the Chief Investor Officer at Aviva Investors, and you are located in Edinburgh, close to Glasgow. And we are going to talk today about your biography, what brought you there, and also what is your role right now as an investor. As we talked about, you are focusing on ESG and working on important projects these days. So with no further ado, I will let you introduce yourself.
Okay, so a brief synopsis then. So I'm a CIO on the equity side. So basically, I still run money. So I still actively run money funds, and I still cover sectors. So I see companies on a day-to-day basis, particularly in the UK, but I have a bias towards metals, mining, minerals, oils. But I see banks, companies across the entire spectrum, and I spend most of my time actually seeing companies and asking them questions and making judgment calls in investment. So that's what I do. I'm responsible for teams based in London, Edinburgh, Paris, and Chicago, and Singapore actually. So we've got investment people dotted around, and we run. It's not that big a number, but it's about 50 billion sterling in equities actively. So it means we've got quite good corporate access to companies, etc. So I'm responsible for delivering performance and all the things that go around that, trying to win business, etc. From an ESG perspective, one of the big trends is obviously more people now want to invest with purpose as well as just investing for performance.
Yes.
And having ESG credibility, and that's not just, used to be mainly governance and issues around board diversity and remuneration, etc. But it's now broadened out, specifically now with climate being a big driver. Yes. So climate transition has been a big factor, but also there's a move where they obviously use the phrase beyond carbon. So the SDGs, so focus on social justice and biodiversity is something, again, it's becoming a little bit more of a feature. And a lot of people like us, investors, are, purely for monetary reasons, chasing that money as well. So because there's a lot of money moving in that direction, people are switching away from standard performance towards more sustainability in their performance decisions. So what I'm trying to do, and I do happen to believe in it, so it's good, but we're trying to reposition our business that we've got expertise, that we can make investment calls and engage as well to create good performance, but also positive outcomes, so measurable outcomes. So what they call impact funds, you measure certain outcomes, whether it's around a climate agreement, science-based goals or climate or diversity or whatever. So we at Aviva, when we look at ESG, we look at policy, so we engage at a high level, whether it's the UN or governments, to try and change policy. We do thematic investment, which is all the SDGs, the climate, people, planet, that sort of thing. We do corporate, which is linked to seeing companies face to face, like BP, for example, what they're doing in terms of pivoting for oil, influencing on that.
Yes.
And then we do what we call active ownership, which is engagement, which is saying, which is something I do quite a lot of. So saying whether it's to Ben Looney at BP, or speaking to his chairman, Helge Lund, who's a Norwegian, about what they're doing in strategy, what we want them to do in strategy, how they're moving away from oil, trying to change companies in a particular direction, signaling what we want as investors.
I see.
And it's that last point where you make most of the difference, in my view. So you can change companies because we have scale, and we do try and do that. So that's a sort of broad sweep.
So this is the point that we speak very often when we speak about integrating business sustainability is reaching the board of director to make sure that the strategy, the business strategy, is actually implementing the sustainability principle.
Yeah.
Because if it's only one department that does it, it doesn't take the same impact. So, what are you using any framework, any principle in specific other than you said? Of course, the Sustainable Development Goals; those are wonderful to use.
Yeah.
Like SASB or any reporting identity.
Yeah. I think the technique. So we're quite heavily focused on outcomes. So one of the techs, and and to some extent, you want influence, and some of that influence sometimes can be. You have to be forceful, and so I think things we do. Obviously, there's a whole myriad of things we look at. We're trying to get companies to move towards the Paris Agreement. We've got specific gender targets, diversity targets, ethnicity targets that might be in the social justice and living wage, and then you've got issues around default. It goes all over the place, and we will target resolutions or engage with companies around those issues. And if we're not happy with what they're doing, we will vote against them. We'll vote against the remuneration. We'll ask for executives to be removed, and we've done that. So if you look at Aviva, I think we were voted number 2 in the world in terms of track record on voting. So we've always voted for pro-climate action resolutions. We've always been heavily supportive of gender diversity, the living wage, etc. And so we'll always support resolutions that push companies in that direction. And when we see CEOs, it's not just the board, when we see these individuals face to face, we will push those agendas as well as the normal traditional agendas around business standard, business practice, what they're doing, etc. Yeah. So I think we do that across the sweep of companies, and companies are more receptive to that message now than they've ever been before, because the investors, our customers or clients or whatever, are more conscious of, as I said earlier, investing with purpose. Yes. They don't just want to see companies destroy the planet or not follow social justice goals, etc. So there's more pressure on us to do the right thing, and we are putting more pressure on companies to do the right thing. And it's almost face-to-face combat, really. Mm-hmm. And that is having quite a big impact in behaviours, particularly in Europe. So Europe's changed quite a lot. Yes, it's got more to go in the US and even further to go in Asia, but it's all moving in the right direction.
Yes, it is moving into the right direction, and we have 10 years with the Sustainable Development Goals. Yeah. It's fast. But we can do many things in 10 years. We saw the past year how so many companies got a new initiative and they adapted their business model to the pandemic that we have. So we know we can go faster into ESG also. So
companies are also, now people know what the SDGs are, and you start to see the presentation packs, etc. Companies know they'll get a higher rating, a higher valuation, lower cost of capital if they actually are seen to be doing the right things around the suppliers and how they treat the environment, how they treat their staff, etc., etc. So there's a financial incentive, and when you've got trillions of dollars affecting and moving in this direction, which is what's happening, it's quite a significant force for change. Yes. And I think the big pivot will come in the next is the US now, with the change of administration in the US. Yeah. They've been lagging, and I think that's going to be interesting, what changes there.
Yes, of course, as we were talking before, of course, it's so important, the change that did happen in the US politics, and now they have someone into the change position with John Kerry, so that's a good start. We hear a lot more into the economics the past month. I would say that in ESG, the letter that is the most significant would be the S for the social aspect. Would you agree with that?
Yeah, I think to be honest, climate still dominates with
Yes.
companies. But I think the Black Lives Matter movement made a big impact with people. People, and the people are the people who invest eventually. And I think that's changed perceptions. The pandemic, the fact we were a community together under pressure, the fact that ordinary people were in the front line. So how long this lasts, but I think there's more of an appreciation around treating people fairly, the living wage, issues around ethnicity, around Black Lives Matter. Those things have been a feature of 2020, which is a good thing. And I think companies have now been put under more pressure, and we feel more emboldened, let's say, to push in those areas. And also you're seeing funds, we're launching a fund next year that's focused on social justice in terms of specific agendas, what we're trying to do on an impact side, and other people are doing the same. So I think that momentum will continue. Climate's still the dominant force, though.
Yes, because it's
Getting
settled.
yeah. So and it's climate change is visible and a sort of a present
That's true.
threat.
So you would say social justice. Could you develop the idea a little more?
Well, I think things there are things around diversity, the living wage, issues around digital inclusion, giving people fair opportunity,
That's
and being treating people on a sustainable basis. That's giving that, and I think companies, education. There's lots of areas one can look at where companies are got responsibilities, and I think in an age also where we've got a very polarized political systems in certain areas, the sort of movement towards consensus isn't there in a lot of places. So it does put more pressure on business to lead in these areas. And we're lucky in terms of investors, we have influence to do the right thing should we choose to do so. And I think that's happening. So there's a lot of pressure from investors to say, look, you've got to do, I don't want you to have terrible supplies from XYZ to get cheap clothes. You need to address that. You need to address the living wage, because that hurts your brand, that hurts us. There's a logic that's monetary as well as a moral code that is mutually supportive. And I think that's here to stay, which is a good thing.
It is a good thing, yeah. Taking care of every stakeholder, as we say.
Yeah.
It's so important, yeah. The employee, and also we know that the new generation, the millennium, the new generation, they will ask as a task force, the new employee, they will require the employer to be sustainable into their mindset.
Yeah, if you're a young person, so I've got a 22-year-old child, and he's very conscious of what companies do, etc., who the suppliers are. We were shopping yesterday, and he pointed out a store saying they're really bad at such and such.
They know.
He's aware of things, so and he's not atypical in my view. So I think that those are positives. Now there are still plenty of things not good, and then also certain areas regionally. With different political regimes, etc., those things are more difficult to influence. So, it's easier to influence around Europe and to some extent the US. Asia's moving in the right direction, but it's a bit more difficult.
Okay, so that's good. So what did you see from the 9 months pandemic? What would you see that is the main tendency that you saw coming out of this 9 months of pandemics?
Yeah, I think it's a difficult one because I think mean reversion is a big feature. So a lot of things I think will go back to normal, sadly. So I do think that there will be, once we go back, then things don't change dramatically. Yeah, so there will be a little bit, we have to watch that. But I do think sense of community has been a feature which I mentioned, and the issues around climate. The whole pandemic thing is an issue around biodiversity as well. So the fact, the fragility and the fact of mutual dependency we have around things like biodiversity and climate and community have become more vivid in the last 9 months. And I think that has changed perception. So I do think people will be more conscious of some of these factors around the environment, social justice, etc. So I think that has changed, but we have to make sure it stays top of the agenda as things normalise. But I think there's been enough of a shock to the system in our lives. We won't forget 2020.
Nobody.
Those that live through it. So I think it will change things. But I think it will change things for the positive in general. That's what I hope for.
It actually really didn't increase the awareness of the the fragility, but also of the responsibility of everyone, that we can make a difference, every one of us.
Right, and everyone's of equal worth. So if you look, in the UK, the people at the front line were the bus drivers, people who worked in the health service. Yes. So some of the things like inequality of pay becomes even more difficult to justify when you look at what's happened in the last 9 months. I think
that's right.
So for one of the things, we're more hawkish, more aggressive now in terms of pay dispersion, in terms of when we were looking at governance and voting on that, for example. So if you're a CEO and you're getting paid 200 times the average wage of the company, it's more difficult to rationalize that, in my view.
It's true, yes, to justify it.
Yeah.
How about as being an investor, did you see a major difference within the pandemic, let's say the past year, about the private equity, the venture equity, and the public and private?
I think that's a difficult one. I think private equity still has quite a long way to go in terms of social responsibility. I think the public sector is under more scrutiny, more pressure, has more influence. We can influence the public sector more than private equity. Private equity is out of sight to some extent, and I think in those areas, I think that's where there are a few more challenges around issues around governance. So I think I am a believer in public sector, being quoted and being visible and transparent. I think that tends to be a good thing. So I hope private equity adjusts on a similar basis. But some of the, I don't want to generalize because it's different, but there's some more degree of moral hazard and social issues that I feel uncomfortable around private equity that still need to be addressed. So the public sector, at least we can see what's happening and we can put them under more direct pressure.
I see, yes. Because it's private, they can manage, there's not as many rules, right? There's
I think there's more moral hazard and whether it's, pay and how they treat suppliers and all these things and how companies are developed, issues around sustainability. Now, I think, some private equity are good, some less so, but I think I'm a believer in the public sector when it comes to visibility in general.
And how about those new economics that we've been hearing for quite a while now, but we hear it a lot more today, is the circular economy. What do you think about, let's take the material like plastic? What do you see in the future?
Well, I think everyone's far more sustainability orientated. So the phrase circular economy, no one really used 2 or 3 years ago. So now it's very prevalent. So I think the attitude to that has changed permanently. I don't, again, the whole issue around sustainability, how companies work, how they impact society, how they impact the environment, that's part of our investment decision-making componentry now. And therefore that affects their cost of capital and how we judge them. So it's not purely cash flow and dividends. So the metrics have changed.
I see. And how about, let's say that I know that in many countries they are developing pack, like for plastic pack, according to the circular economy. So as an investor, how would you measure or evaluate a company that is developing, let's say, a new chemistry, a new recipe, a concept that would replace the plastic? So
for example, it's a big. I look at this area a little bit actually. So plastics is very much, people want to move away from plastic. So companies are being quite innovative in terms of trying to use paper packaging now differently. So I can give you, there's a company called DS Smith, which I had a meeting with this week actually, where they're one of the biggest packaging companies in Europe. They're doing very well because of e-commerce, but also this move away from plastics. There's a company actually in Scotland, in Edinburgh, which has just developed a completely biodegradable bottle.
Okay.
And that's a big breakthrough.
Yeah.
And so obviously it's a question of scaling up. So I think in a 5-year view, it's quite possible that the plastic, Coca-Cola makes some horrific number of plastic bottles per minute.
Yes.
And so there is a lot of pressure now to move away from plastic in lots of areas. I mean, some areas it's more difficult, but things like paper bags, plastic bottles, I think in a 5-year view, I think there's a good chance of that being completely different. And also investors there's some of the companies are looking at ocean, what they call ocean engagement. So what's happening to the ocean, issues around plastic, biodiversity, it's very important. So plastics is a big deal already as part of these SDGs to some extent. So
that's right.
you're already people looking at specific funds linked to ocean, for example, what's happening there, plastics being a big feature.
Yes.
Biodiversity funds, again, plastic being significant feature.
So looking at alternative or really looking at a different option actually to be able to use it or to avoid the single use of the plastic actually be a good way in reducing the package. There's so many concepts that does exist.
Yeah, and there's a lot of money trying to address that now. So, but having said that, there's a lot of environmental damage that's happening right now with plastics, and the PPE thing hasn't helped around obviously the pandemic. But I think I'm again hopeful things will change there, and the consumer is more conscious of it as well. So
that's right.
That means the financial incentive to get it right is higher. And that obviously draws capital in to provide a solution. So to some extent, that might, hopefully that works quite quickly.
To answer those requests from the public,
the
citizens requiring it.
Yeah.
So in summary, if we look at 2021, let's say what's coming for us into a sustainable perspective in economy globally.
Yeah, so I think the challenge will be as we normalize, as we've talked about, we don't lose some of the gains and perceptions that one of the some extent benefits in inverted commas of the pandemic. And I think because we will see a period, I think, of economic growth, you get this bounce back, people will go back, travel and go back to bars and restaurants and try and relive that, which is a good thing, but what you hope for is that some of those concepts and changes stay, and I think that will happen. I think there are some big trends around climate, what the oil companies do, what the coal companies do, and it's very important that tilt, carbon emissions being a big driver in terms of reducing them, that continues in 2021. So it's important that policy, that the US come back, China start to make progress. So I think, and you've got obviously the COP in Glasgow in Scotland in November next year. So I think, and there's a big biodiversity conference in China as well next year. So you'll start to see the equivalent of a biodiversity COP starting to come through. So I think it might be the year where this phrase beyond carbon starts to hit. So people look not just at climate, but they look at social justice, they look at biodiversity, and hopefully in a situation where economies are getting better, so we can be more cheerful about it, as well as sort of trying to make progress in what's been quite a difficult year.
Yeah, of course, that's it. That's the same thing to become cheerful, like I think it's in 1920s, when they actually celebrate with all.
Yeah, that's right. Yeah, as long as it doesn't end as badly as it did.
No.
But I think next year economically it should be a strong year because if the vaccine comes through, things by March, at least in the Western world, things will be starting to normalise. The one other thing, I think this is a personal view, is that we talk a lot about ESG, but this thing about just transition is important
Yes.
And I see it as a global investor. So one of the reasons coal is still a problem, as an example,
Yes.
it's the cheapest form of energy. So that's why they build coal stations, power stations in Bangladesh. So and Vietnam and India. And so this thing about, we have to solve their problems as part of it. And I think at the moment, that we can't save the planet if we only focus on bits of it. And I think trying to deal with the just transition bit, is something hopefully will be addressed as well next year in COP, because that's not working at the moment in my view.
And could you explain us in your word what is a just transition?
Well, I think it's to allow countries to move to sustainability, which has a cost. So if you're a country that depends on coal as a cheap energy in Bangladesh, and you say stop doing that, and obviously the cost of that goes up, and it's a poor country that they have less money to send people to school, da-di-da. So you have to be able to say to that country, so the rich, us, in Canada and the UK, that's why overseas aid, linking some of these projects to support these countries to move and make sure they get the money to make the transition becomes important, because otherwise they won't do it.
Won't do it.
And there'll be an because economics is a big driver. And the economics don't support transition in some of these areas at the moment, so we have to help them. We can't order people to do these things.
No, especially.
And we obviously, China's a big factor, but obviously America, if you look at carbon emissions per head, etc., the polluters, we're still pretty big polluters. So I just think transitions needs to be addressed.
It needs to be understood also, because we hear a lot of messages, but sometimes people
don't. No action. But the action's not been there. So they've been promised lots of money, including in recent COPs, and it hasn't really materialized. So I think we have an obligation really there as well. So that's a government. The government issues. That's more difficult for investors to drive.
Yes.
Things like carbon pricing. Sometimes governments have to intervene, and we can try and support that, which we do. But some things you can do individually. Some things you can do at corporate level. Some things also require government intervention.
Government. Yes, I was listening to an interview actually this week with the Canadian, a Quebecer economist, and he was explaining the way the carbon tax is actually working, and the mindset behind it is really to also drive the customer behavior. To understand that if you buy this kind of gas for your car, there's a lot more tax than if you decide to change your whole behavior, your whole lifestyle. So there's an incentive also, I believe, behind taxes.
There's lots to do still.
There's a lot to do. But the work has been done quite well into your company. How long it's been since you guys are working onto the ESG project?
Well, so at Aviva, and I don't take credit for this, but Aviva was we founded quite a lot of these. We've been working on this since the 70s. We've got a very long track record. So before it became remotely fashionable. So obviously we're very focused on it now. And we want the more investment that goes into companies or vehicles that are focused on the Sustainable Development Goals, the better. Because that affects how you position capital, affects how companies invest, how they find solutions, because you want solutions as well as transition. You need to find solutions to the issues around plastics, around carbon emissions, and we want to support that, in various ways around social justice. So I think the more money is directed in these areas, and more we can lead and customers lead in that direction, the better. And it's a trend that's quite marked, and hopefully it will continue.
Yes, it has to continue. We have to keep working at it.
Yeah, exactly.
Sustainable Development Goals, it's 2030, so another good 10 years to work at it, and we can do a lot of things into 10 years.
Yeah, good. Thanks very much.
Thank you so much. You're coming from Edinburgh, I would say, right? And we appreciate your time and all your good information that you brought us to the Conscious Strategists. It was really insightful. Thank you for joining us and hoping that we can speak in 2021.
Okay, great. Thanks.
Thank
Great.
you.
Thank you.
Have a great day.
Bye.